Hey, thanks for watching Realtor on the Roof. Today we are finishing up our discussion on financing land. Hey, thanks for joining me on Realtor on the Roof Land Talk. My name is Stephen J.B. Davis, your land specialist and residential realtor here in Central Kentucky. We're finishing up our discussion on how to finance land. I apologize for the windiness. I don't control the weather. I do not apologize for my hat. Today is the Elite Eight, and my alma mater, the University of Michigan, is playing against UCLA for a chance to battle in the Final Four. So that's what's going on today. Because of the windiness, I'm not on my roof. Would rather not fall off, and admittedly, the noise would probably be a lot worse up there. So a few housekeeping things. If you didn't see the last video, I discussed financing land when there's a pre-existing home, a livable pre-existing home. So if you missed that, go ahead and watch it, because that's not what this video is about. And if you are interested in loans and sort of configurations of financing where you're trying to build a house on land, not like in a subdivision, but like on rural land, I've already done a video on that, and it's in my first season. I believe it's the very last episode of my first installment of this series, and it's called it's just called Home Building. So you can watch that, because that is not what today's video is about. Today's video is just about, financing raw land. So there's three basic parts. Let's jump right into the first. The first would just be a land-only loan. With a land-only loan, it's a balloon loan. And with balloon loans, basically means you pay interest, you have a down payment, you pay interest for the entire term of the loan, and then at the very end, there's a balloon. There's a very large payment due at the end of the term. So in real world terms, you're looking at a few very interesting things about a balloon loan. For one, you're looking at a 30 to 40% down payment. Let me say that again. A 30 to 40% down payment, okay? This isn't like an FHA where you get to the option of a 3.5% down, or a conventional where you get 20% down. It's a large amount of money that you have to put down in relationship to the total price of whatever the property is. Secondly, the interest rate is going to be higher. For our example, we're going to say it's going to be about 4.5%, which I think is about fair for today. And it's going to be a very short term. With a normal home loan, you get that 30-year mortgage type of option. You could do 15, you can do 20. With land-only loans, with balloon loans, they're going to be 5 to 7 years. Now, there may be some special products being offered in your particular locale, or with a certain bank or something, that may afford you a few more years on that type of loan. But for our intents and purposes, we're going to say that our loan is an 8-year term. I think that is a fair amount of time. So an 8-year term, 4.5% interest rate, and let's say your property costs $100,000. With that $100,000, let's say you put 40% down. Let's just go to the high end to make the math easy. Also, because I already did the math and that's what's in my head. 40% down means $40,000. So that means your balance is $60,000. That effectively comes out to $305 of interest-only payments for 8 years. And once that 8-year period is up, you owe a balloon loan. And in this, a balloon payment. And in this example, that equates to about $51,000. Now, not that appetizing, right? And if you can afford, in whatever your balloon loan situation is, to overpay, meaning you can pay more than $305 a month in interest, perhaps you can do triple that, maybe double, whatever the case may be. It's probably good to do so, but if you can't, then you owe that balloon payment at the very end, and it's always going to be large, because the way that this loan is designed, and the way that most land loans, when it's land only, the way that those loans are designed is to pay interest only. And read the fine print. If this is the option for you, there may be prepayment penalties. If you are overpaying, you may pay a premium for getting rid of your loan before its full maturation. And in some loans, you may not. So overpaying, you don't lose anything by paying early or not allowing that term to have a balloon at the end or something like that. So that's how a balloon loan works. And again, 30 to 40% down, very short term, generally less than 10 years for everything that I've seen. And it's going to be interest only unless you decide to do otherwise, meaning that there will be a big payment at the end. Sorry, a lot of times there's deer around here, so I was just seeing if maybe that's what I was hearing. So then there is another type of loan, and it's a farm loan. And with farm loans, it's exactly what it sounds like, but just in case you have tended to use the word farm interchangeably with just land in general, let's define what a farm is. A farm is a productive piece of land, okay? And for loan purposes, a farm is a productive piece of land that provides you income for 51% or more of your yearly income. So you can have 50 acres of land and say it's for sale and it's been used for cultivating hay and livestock, right? The people that you're potentially buying it from, they've been farmers. You're going to buy it and you're not going to farm. That means you can't get a farm loan. Farm loans are for farmers. They're effectively a commercial loan, a business loan for a farmer. So if you do not plan to make the majority of your living farming and you can't grow anything, maybe there's bad soils. I mean, whether that's growing trees for wood products, whether it's raising livestock, whether it's growing crops, whatever the case may be, if you can't make 51% or more of your money off of that land and have suppliers and have a business plan and have the know-how, you're not really going to be someone who qualifies for the type of farm loan I'm talking about. The farm loans I'm generally talking about are the USDA-backed farm loans. They have incredibly low interest rates, and there are lots of programs for maybe you're a beginning farmer, maybe you're a minority farmer, maybe you are someone farming a really needed crop or some other type of commodity or asset in your area. It's for farmers. If you are new and you are truly interested in farming, kudos to you, because we need more farmers. Farmers do very important work all over the world, but certainly in this country. 2% of anybody that farms is feeding like 98% of this entire country. So that's one thing. But secondly, if you are interested in farming or a farm loan through the USDA programs, it is imperative that you have a plan. They will require a plan. What's your experience? What types of qualifications do you have in the agricultural world? If you have none, who's essentially going to, I don't want to say sponsor, but you're going to need some sort of mentor or supervisor in a way, so that the investment they're making in you by backing this loan for you is secured by someone that does know what they're doing. Farm loans are incredibly cool loans, but they are for farmers. So if you're like, oh, I want to have 2 cows, you're not making a living on 2 cows on land. And even if you say, well, I can live on not very much, well, that's fine, but that's not going to suffice for a bank. Same thing with chickens. You can have a coop of chickens, that's cool, but that is not a business plan. That is not a farming business. That's having chickens, and that's awesome, but not for the purposes of a loan, okay? I'll put some links down in the normal comment box or description box if you're watching on YouTube, and some links in my bio if you're watching on IGTV, because there are some really great ways to take advantage of the government-backed programs if you are doing some sort of agricultural activity as a business. The loans are fantastic, and more people should know about them. And then there's the last thing that I just wanted, a cautionary tale, I guess. Not really a tale, but a word of caution. And that is owner financing. There are plenty of honest people in the world. I know some of my land colleagues in other states who they buy up land and they develop it and they will offer owner financing to the future buyers. But everybody's not like that, okay? Owner financing can be incredibly predatory. And so I just implore you, if that is the route that you go, if you say, oh, it's owner financing, just read the fine print, ask a lot of questions. A lot of people are out there to essentially banking on you to fail. The 2008 housing market crash that we had worked a lot in the same way as what seller financing can be. Again, that's not everybody, but it is a lot of people. And so they essentially loan to you at a very high interest rate, much higher than probably any bank, even with fair credit, just bad interest rate. And the meantime that you're paying your payment back to that owner, you haven't earned any sort of legal right of ownership. That's key. You are essentially just paying rent. So that, you know, if you are a person that unfortunately ends up defaulting, you have no legal action to try to get that land back should your circumstances change. Whereas if you were to own a house and it were owned by a bank, there are periods of time and certain parts of processes when a bank may want to take that house back from you for defaulting, that you can say, wait a second, I can afford it now. I can make payments in this way. I can do these things to keep this house that I have a legal right to. With owner financing, that may not always be the case. So read the fine print, be very careful, be very leery, be very suspicious, because it is your money, and a lot of folks kind of make business models on people defaulting on land loans, and then, you know, they take it back and they resell and whatever. Again, not every owner financed situation is that. I couldn't even put a percent on it, but I do know that there are many folks that succumb to how easy it is to get that financing, and then the situation turns out to be something that they weren't expecting and something that's very disappointing. And it exists. It's just good to know that it exists so that you do not find yourself in a compromising situation financially, emotionally, or what have you. So that's pretty much the wrap up. You've got the land-only loans, which are balloon loans. You have farm loans, which are for farmers or beginning farmers, which have a lot of other business hoops and commercial hoops to jump through in order to be approved for something like that. And then you've got seller financing. Your situation is going to be different than anybody else's, so you have to make the decision that's best for you. If you have other not identifying questions, but other clarification questions, let me know. Let me know in the comments. You can email me, all of those great things. Find me at landandhomes.co, both on social media, and that's also the name of my website. I hope that you find this useful, and I've got one more video in the land talk kind of genre before you won't hear from me about land on this platform for a little while. So enjoy, ask me those questions, and have a great day. Hey, so thanks for watching. Let me know your thoughts, your questions, tag someone, or leave a comment below.